This is our Forex blog for May 25th, 2011. And like most days, we really want to buy the strong currencies against the weak ones and sell the weak ones against the strong. And earlier today and last night, the dollar and the yen were both strong. The dollar has a weekly trend that's up. The monthly trend was down, and it just shifted up a little bit here. It's basically on the border of switching to an uptrend. So until you saw that weakness at 4:30, it would have been smart to look for weak currencies to sell against the strong dollar. And you can see the CAD had weakness pretty much throughout the day. And so earlier today, you'd buy the strong dollar against the weak CAD, and you'd also sell the weak CAD against the strong yen, starting the day off. Let's look at the dollar CAD coming up to last night. The price was underneath the hourly and it broke out. We also have a narrow range breakout right here, and the market just shot up about 30 pips. And one of our new tools, FX Trend Reversal, shows our normal trend reversal on multiple time frames on the 5-minute chart. I'm looking at 10-minute trend reversal signals, 15-minute, 30, hourly, and 4 hours. And the bigger they are, the more likely the market is to reverse, and the triangles are the biggest of those. So up here near the high, there was two big, longer-term, either hourly or 4-hour counter trend signals. And it didn't nail it on the top tick of the day, but it did nail it about 5 or 10 pips underneath the high of the day, and the market went down ever since then. And we got a counter trend buy signal right here at the bottom that caused a nice little bounce up. So trade with the trend until the market moves either statistically too far outside our upper or lower containment bands, hits our Fibonacci retracement or profit target levels, or you get some of these longer term signals. In other words, in the past, you'd have to have a 10-minute chart up, 5-minute chart, 15, 30, hourly, and 4-hour just to see these signals. And now you can see them on your 5-minute charts, or 2 minutes, or 3, or whatever you use. Let's look at the CAD yen. Weak CAD, strong yen. And guess where this went? Just like I said before in the other one. You want to trade it with the trend until it hits a likely reversal area. And so starting the Asian session off, it broke underneath the hourly. You go short right here. Extreme weakness. Sell the next retracement. You only made 10 pips there. Either you got short here, or when it went sideways in the low half-hour sideways rectangle, you go short. And most of the time, it will go down to at least the first fib target of the previous swing, which is, guess what, right there. It only went 2 or 3 pips past that. It had less weakness than before, and it was also my overnight Fibonacci area. So very high probability reversal in that. So you use a currency meter until currencies get to areas where it's likely to reverse. The euro was weak throughout the day, but so was the dollar and the yen. The pound, or I should say the euro, had more peaks of weakness than it did peaks of strength. And so basically from 5 o'clock onward, you could have sold that against the stronger pound. Euro pound very likely to go down. Let's bring that up on the chart. And guess what? It's underneath the hourly. This is a good place to get short right here because it's a weekly pivot level, previous day's low, counter trend sell signal, and it really wasn't that strong at the time. And guess what? It came right down to the lower containment band, and it probably was a fib target of this last drop, which it came within 2 pips of the lower 1.618 fib target. So very high probability place to take your profit on that trade at the hourly. When currencies trend, the first time and usually the second time they hit the hourly, that's usually a high probability trade, phenomenal trade right there. And the currency meter, pretty much sets you up for that. Swiss, very strong today. You could have sold the Swiss, or you could have sold the Euro Swiss. Weak Euro, strong Swiss. It's going to go down, and you can see this one just pretty much went straight down. I don't usually trade the Euro Swiss. The New Zealand was super strong today, so you could have been buying New Zealand yen or New Zealand dollar. Here's a New Zealand yen. And when it's above the hourly, it's more likely to go up. I don't really see any patterns on here that I would have really wanted to get into other than the low. When the market came down and hit this fib target off the first wave, it had less weakness even though it was at a lower low. We have 3 or 4 counter trend buy signals right there, and it had less weakness than before, and the weekly monthly trends up. That's a very high probability trade. It's likely to go up to this weekly pivot level here, or the hourly moving average, which is also the monthly pivot. Major resistance here. I would have either exited here or here. Once the market broke above there with a lot of strength, you might buy the first pullback. That may have given you 20 pips. And then this next pullback made a lower low, so I wouldn't have probably bought that one. If it had double bottom right here, it would have been a good trade as well. Here's the New Zealand dollar. Again, made a slightly lower low, ton of counter trend buy signals, weekly pivot right here with half the weakness it had before. Very high probability reversal since the weekly and monthly trend is up. It's not doing a counter trend trade by buying the lows if the longer term trend is up. You're just buying a pullback because you know that most of the time the biggest traders and institutions in the world are also buying dips because they're longer term traders. You know, they buy as markets go down and they exit their positions as they go up if they want to be long them. And our lower containment bands are very high probability places to get in if the weekly and monthly trends up. In other words, if the monthly and weekly trends down, you'd want to sell our upper bands. So I'm going to also go over some of our counter trend signals. We now have, like I said, the ability to see longer term signals on our charts, and especially the super big ones like this usually cause reversals. And so even though the euro dollar's weekly and monthly trends down, it's right near the lower containment band, and you know it's likely to reverse. Earlier last night we have two narrow range 4-hour bar signals that are very high probability for a breakdown. Longer term trends down, it's in the middle of the range. It could work its way all the way to the lower band, which gives you, a potential of a lot more pips than you're risking. Pound dollar, some counter trend buy sell signals right here, and the market went down. A ton of them right here, and the market went down. Once it gets near the upper fib levels, you can just, on the scalping basis using tick charts, go short. You made a little bit, go short here. Probably only made 5. And anytime a currency double tops, you don't want to sell the third one. Draw your fibs on this last wave and look to get short up here. Get into a small position right here, add to a bigger position right here. Your average price might have been 85, and it didn't really pull back that much, but it did pull back to 66, giving you a chance to make 15 pips on a pretty large position at an extreme. And then the double top right here, you do the same thing. You get into a small position right here, and if it goes higher, you scale in. It didn't go higher in that case, which double tops usually don't. And you have a big, longer term, I think 30-minute bars trend reversal signal right here. So this is very likely to pull back 25 to 50 pips from here over the next few hours.